how to consistently grow a small account. My name is Don Kaufman, and you are watching a TheoTrade presentation. A bit of a formality here, a risk disclosure. We are not financial advisors nor a broker-dealer. On top of that, I'm also going to throw up here a copyright disclaimer. This is ours. This is not yours. And one aspect that I like to bring up is, listen, you want to get a hold of me after tonight? You know where I am, right here in Scottsdale, Arizona. But really, the easiest way to get a hold of me, just support at TheoTrade.com. Support at TheoTrade.com. We actually use a common inbox here at TheoTrade. That means you go to support at TheoTrade.com, put Don in the heading. That's for Don Kaufman, or put Don Kaufman in the heading, and that email will get to me. We answer emails. All of us answer emails here. So if you got trade related questions after tonight, we're here. And it's really important that you guys know that right up front. All right. With that, this is why you're here. Listen, the end of this webcast, the end of the webcast, you got to walk away with something tangible. The most important thing to me, this evening is that whatever time that you spend here, we'll probably run a little bit over an hour tonight. I hope that's okay with everybody. Can we run a little bit over an hour? Because I've added quite a bit to this presentation. We're talking about, consistency, but we've also got to talk a lot about volatility, obviously, tonight. And I want you to be able to walk away with something tangible, something you can use, something definitive right off the bat. And that's exactly what we're going to try to do. So a few points I want to make tonight. One of the first ones, and this is seldom discussed, but we're actually going to talk about why traders and investors alike, they fail and outright fail with a lot of the strategies they embark upon. We're actually going to poke holes in a couple of the most common strategies out there. The second point over here, why you need to be cutting risk. You got to cut risk in order to produce consistent 55% plus returns. It sounds crazy, but you have to cut risk, and you're going to learn that right up front over here. And these returns are surrounding extremely high probability movements in any stock, ETF, or index product. Third point over here, you're going to learn to grow and account high degrees of consistency, in a world absolutely filled with volatility. One of the things you got to realize about volatility, and I'll talk about this extensively this evening, volatility, is going to do the work for you. Volatility is going to be a good thing, and that's hard, again, to accept if you've been knocked around a lot in the last couple of weeks. Number 4 over here, how you can trade without having to continually monitor your positions. So we're actually going to talk a little bit about set and forget it type orders, with an extremely high probability strategy. So I wanted to just detail, again, a couple of aspects up front. The most important thing, by the way, we're going to go deeper tonight than these 4 bullets on here. Deeper tonight probably than we've ever gone before, because there's just so much going on inside of this marketplace. But again, the most important thing to me this evening, you walk away with something tangible. Now, before we go head on into this, we have a little gift for you this evening. If you stay with me to the end of the webcast, we'll actually provide you the SPX expected move indicator. For those of you, if you've ever tuned into some of the videos we do, like on the weekend video or a Monday or a Wednesday video that I do, I talk incessantly about expected move, which is what this indicator is. It's 3 years of data and weekly expected moves. And I'll explain what those are in a second. They're my hand calculated expected moves. It's an indicator that literally changed the way that we view markets. And this is actually what the indicator is. And by the way, the indicator, it's $197 value. I'm telling you, stay tuned right at the end of this webcast tonight. I'm going to give you a link specifically to that SPX expected move indicator. This is what the indicator actually looks like. And when I said there's 3 years of it, and I'll just read you a little bit about it, but the weekly expected move, these are ranges, right? These are ranges. It's what the marketplace, is expecting, the underlying to move. How does it do it? These expected moves are actually generated from an options chain. And then there's these highlighted candles. See the highlighted candles? Those are what we call breach. Those are breaches of expected move. I'll just give you a quick point over here, because what the study basically does, what it does is it tells you whether the markets are efficient or completely inefficient. whether the marketplace is contained or whether the marketplace is ripping apart at the seams. Over here, okay, that is 23 consecutive weeks inside of expected move. 23 consecutive weeks inside of expected move. Now, we've actually had 10 out of the last 11 weeks outside the expected move. Here's the most interesting irony of all of this, okay? If you look back here, breach, 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 breach. This is actually before anything happened with the coronavirus. Before it happened. The market saw it. The market could feel it, and the market started coming apart well before most people anticipated. It was a phenomenal setup. But I just wanted to stress that to you. This is an indicator that we're going to provide to you. Again, there's a tremendous amount you can do with it. You got to stay tuned to the very end of the webcast. I put a huge amount of weight into this because I have literally spent years of my life putting together some of the data sets that are in this SPX expected move indicator. Now, a few housekeeping items. Again, before we officially get rolling, housekeeping. Tonight, this is skill set. This is skill set. And I'm going to tell you right now, some of the stuff I'm going to throw at you, okay? I don't care how experienced you are, how inexperienced you are. You got to pay attention. We're going to throw, again, a couple of curveballs at you. Listen, shut the door. Turn off your Skype. Turn off your chat. Whatever else is distracting you on your computer. Close Facebook. Okay, I mean, how many more jokes can we actually hear about being quarantined? It's over, people. You're locked down. Focus. Phone's on silent mode. Kick the kids out, the grandkids out. Get rid of them. Okay, the dog can stay. By the way, I would rather do this tonight. Why? I've got 3 kids downstairs. Go to school. Open them, please. Okay, listen. You took the time to be here tonight. This is important. Focus on being here, because what I'm going to show you here is going to change the way that you view markets. All right. This is a little bit about me. So, again, my name is Don Kaufman. I watched order flow for 15 years, which kind of provides me with a little bit of a special skill set. That's why I'm here. If you've never heard the term order flow, I'm going to explain that in just a moment. So, a little background on me. I actually grew up around traders. My uncle actually started one of the most prolific trading firms ever in the Chicago area. He started trading in the mid-70s, and he went to work for a couple of individuals. They financed him. They backed him. He built a trading firm from one seat in 1976. By 83, he owned over 500 seats on exchanges worldwide. So, as I said, I kind of grew up around it. Now, I didn't get involved in trading until the late 90s. It was a pretty easy entrance for me to get into trading. 3 weeks out of college, I ended up in Chicago and spent there, well, ever since. But after a couple of years on the trading side of the business, from 98 to about 2001, I actually worked initially trading on the floor. Then they moved me upstairs behind a computer. Then I had a nice invitation. Invitation came from a few gentlemen that worked on the trading floor that I knew really well. They invited me to come to a startup called Thinkorswim. So I actually built the education division of Thinkorswim. I went on to help take the company public in 2007. We were acquired by TD Ameritrade in 2009. I then took over all the education for TD Ameritrade and their 7 million clients. I stayed to TD Ameritrade until 2015. I did an exit in 2015. Again, it was a public company, so I exited. It was great. Still have a great relationship with them. But in that time, I built and ran education for both firms. More importantly, though, I had access. I had access to all the flow and the largest retail flow in the entire industry. A lot of people don't know this, but at TD Ameritrade, they have the largest retail order flow, period. Nobody has more trades going through their system on the retail side than TD Ameritrade. And what we used to do, watch flow. And what's flow? I had access to everything that you did. Now, that doesn't mean I looked up your account and be like, what is Joe doing today? I did do that sometimes, which is perfectly par for the course. We used to actually study big data. And big data, we'd basically go through and run studies. Who made money in options? Who didn't? We studied. We know what works, what didn't. I mean, how do you think we built the education division of TD Ameritrade? By studying what everybody did, all their habits in there. Listen, what you're going to learn here tonight comes from watching billions of dollars of others' mistakes and really what works best for retail traders. So it's a little background on me. I figured that would, for what it's worth over there. Next over here, I still appear on TD Ameritrade their TV program from time to time. This is more recent. I did a spot last week. I'll do a spot tomorrow here. I've also done a couple of tours of CNBC. I prefer not to do CNBC, the talking heads, but this is one of the more memorable ones. This is myself versus none other than the man himself, the shark himself, Kevin O'Leary. Couldn't have been a nicer guy, by the way. By the way, I was the short and he was the long inside of Apple. So a little bit of background on me, and I figured I'd give you guys a little bit of an introduction to it. So with that, jumping head on into it. Volatility, does it have you down? I just think that's a fair question to start with. Who's getting knocked around a little bit in this volatility? Come on, it's a fair question. Getting knocked around in volatility. Because I'm going to tell you right now, this is it, people. This shouldn't bother you right now. Okay? And I know a lot of people got caught off guard, and I get that. But this is it. This is the time. Okay? This is it. Volatility is the biggest opportunity. And I was telling a story, and before I dive head on into some of this, I'm going to tell a quick story. Only after 2008 did I realize, only after 2008 and 2009, and again, at the time, we were building, a huge brokerage firm, but I was trading heavily. That's some of the heaviest trading I've ever did. At the time, okay, you didn't really realize it, but afterwards, I'm like, this was the biggest opportunity of my entire life. This was it. This was the lifetime opportunity you're waiting for, right? Like 2008. I'm buying up houses. We're shorting markets. We got long markets. I mean, it was a grand slam home run if you knew what you're doing. Once in a lifetime opportunity. Here we are right now, and I'm going to tell you it's 12 years later. Okay, this is better. This is bigger. This is better. This is going to be huge, people. And I cannot stress that enough. Now, I am going to show you something. Okay, I thrive in volatility. I grew up in volatility. I started trading in 1998. In 98, by the way, I just turned 44 years old last week. was a great birthday, let me tell you. Locked in a house with like 3 children. Oh, yeah. Okay. Bad things, people. Bad things. Anyway, it's like a version of The Shining in here right now. But I want to show you what's possible in volatility. And I don't say this to put anybody off, but this is the last couple of weeks. And if you've never seen this before, when I say you've never seen this is actually what we call net lick. This is actually a screenshot off of the Thinkorswim platform. It's the biggest platform now in the entire world, but this is a screenshot. And what it shows, okay, is day by day. All right. And if you want to know what's really possible, okay, and I'm going to tell you right now, this was a $211,000 account. Okay, $211,000 account on February 23rd. This, okay, is literally a week of trade. So that's a week of trade, taking it from 211 to 248. Then I actually took a quick screenshot of the exact same account, all right? And this was a 5-day net lick, and this is where I started to flatten out my positions. By the way, this goes through a weekend, but this starts where I flattened out positions, but I got it all the way up to 308. And if people tell you they're making more than that, they're taking just huge risk. By the way, this account is an IRA. This account's an IRA. This is not a crazy portfolio margin. This is my IRA because people want to see what is possible in volatility. And if you're hitting it right, this is what's possible in volatility, plain and simple, because this is my account. I'm also going to show you a couple of trades to kick off. All right, this is when I say this is what's possible in the extreme, and we're in the extreme. This is actually what we call the VIX vol spread. This is a volatility trade, and I just wanted to show you. I knew nothing, okay? And I'm just going to take you through this because you're going to see a lot of live trades. You're going to see a lot of live trades that I'm doing, okay? But right now, I'm just showing you a couple of trades that I have done. Every single trade that I am showing you this evening is done in an IRA. I trade in my IRA right now, okay? Again, I exited in 2015 from TD Ameritrade. I don't need the income. We launched TheoTrade. I trade out of the IRA because I don't need the capital necessarily coming in, okay? I actually enjoy this stuff. This is a VIX vol spread. I had no idea. Okay, this, by the way, the VIX vol spread's done for zero. It's basically you're selling a put spread to buy a call spread. Now, some of you don't speak Option Geek, right? Okay, you don't speak Option Geek. That's okay. But you're going to learn a lot. And by the way, this VIX vol spread is still totally in play. I'm going to do one tomorrow that's going to be huge. I'm going to do a huge volatility spread tomorrow. It's gonna be good. Anyway, I closed this one over here for a $3.75 credit. Opened it for nothing, but I wanted you to see this is how it works. These are the times of the trade, the dates of the trade. Over to the right hand side is what I bought and sold it for. It's opening and closing. The next one, this is what we call a risk twist spread. And again, I'm starting with trades that I've already done. Then I'm going to show you trades that I am currently doing. This is the XHB. It's the home builders. Okay. Now this one, we had a pretty good idea the market was coming down and coming down fast. I paid 53 cents for it. Okay, I closed it for a $3.62 credit. It's every $53 I invested, I got back 362. It's a 583% return, okay, inside of 1 week. It's an absolute grand slam home run. By the way, this doesn't have to be $53. I'm just showing it as if it were one lot, okay? This could be $530 to be a what? Okay, $3,620. I just wanted to show that, but still 583% return. The next trade up, this is the XLU. This is the utilities. Okay. By the way, if you've ever tuned in, okay, how many of you joining tonight have ever tuned into any of the videos that we've done? Okay. And we do some videos, day to day. This XLU spread specifically, okay, I did on one of the nightly videos. I didn't do every trade in the nightly video, not even close. But this XLU spread, I showed everybody in the world this spread. Yeah, whatever. Okay. On this particular day, I showed the spread. I put this one on for a $96 investment, and I got back $1,272. It's a 1,225% return. The XLU really was, okay, the home run of all home runs. And again, this could be 960 to be able to make 1,200. 12,720. Okay. And again, I just wanted to detail a couple of trades right off the bat. By the way, I'm not, we ain't done by a long shot, people. This is the run. And what I'm getting to over here with this is the run that actually produced these returns. Okay. This is the run we went on. So the XHB, the VIX, the XHB, the XLU. Next one is an IWM. This is part of an infinity spread. Okay. And I want you to look at this very carefully because I want recent trades up here. I can't stay like, I showed you a trade from a year ago. Forget that crap. How about I showed you a trade from a week ago? Because this is 3 days. I put it on for a 20-cent credit, closed it for a $6.48 credit inside of 3 days. This is a bounce trade, bounce and fade. This is an infinity spread. You want to see, again, what's possible in volatility. I told you I went on a run. And in this, okay, this is some of what our members are saying. Marshall, okay, Gross. By the way, this is this recent enough for you? Because all of these people were inside of these trades. These are some of our clientele here. GDX ended up having a fantastic trend down day, made 50%, but if I hung on there, could have tripled or quadrupled it. Okay, at work, and didn't have time to stay tuned. I put this up here because I thought it was kind of funny. I'm like, he was at work. I don't think he's at work anymore. This is Trader Vic. Okay, wow. Thank you, TheoTrade. Just closed my position for a $30,000 profit. We were hitting it hard. Okay, that's March 27th. The reason I bring up March 27th, if you look at the date of some of the closing of these trades, they're all right and around that time frame. And then another one on March 27th, got out of Lulu Butterfly for 137% return. Listen, we're going through an incredibly difficult time. Okay, but in this chaos, and in any chaos, you gotta just never forget volatility is so very, very good. And don't let anybody ever tell you otherwise. Okay. This is the time. This is like the biggest opportunity, okay, that we've ever seen over here. And I'm telling you right now, what you're about to see in the overall marketplace, people, you think you saw hideous, you haven't seen anything yet. Okay. The first thing I want to cover tonight, the first thing is about risk. Okay. Listen, your money is on the line. And before I can go into like, well, let's talk about how to make money. I want to see some MACDs and Fibonacci's. Forget all that garbage. Forget it. Okay. How you handle your risk is directly correlated to your success in the markets. Too much risk, you're going to panic. You're going to close the positions continuously at the worst possible time. But at least you're consistent with your panic. One of the things that I have learned, okay, I had 15 years behind a screen where I could see everything that everybody did. And one of the things I've learned, okay, is that people just do the exact same thing again and again and again. It's hideous. It's hideous. They just do the same thing. I'm too big. I barfed out of the trade. By the way, this is what we call barfing out of a trade. Okay, that's kind of what it looks like. I can't stress this enough. I've looked at hundreds of thousands of accounts. We just know what works and what doesn't. And I'm going to tell you right now, before I even go any further, if you're too big, you've already lost. You can't be too big, right? You got to control risk. You got to control risk. It's the only way that you can function in this volatility. And I wanted to actually share something with you here. This is actually from Todd Summerall. In fact, you'll see in this little letter here, he told me to share this. So he said, "Hi, Don. Don't know if you remember, I emailed you a few weeks ago, okay, and told you my delta was positive a couple of thou or more. It means positive delta. He owned tons of stock, okay? You told me smash it, okay, or I'm going to be in trouble. I smashed it. You saved my account. This is not about making money, people. This is about, okay, initially not losing it. I just want to thank you. For your information, before Theo, I had no clue about Portfolio Delta. Big hearty thanks to you and all of your team. My finances would have been, okay, a goner without your advice. You can use this if you want. So I'm using it. Thank you very much, Todd Summerall. I just wanted to share that with you. By the way, that came in, okay, this past Friday. It just came in this past Friday. Here we are, on a Thursday afternoon, but came in last Friday. So listen, here's what works. A couple of things. Follow a system that's been sourced from hundreds of thousands of people like you. People always talk about what some market maker did on a floor. Guess what? I was a market maker. I don't give a crap. None of that crap works for retail clients. You got to figure out what works for retail. You got to cut losses and use repeatable strategy to obtain incremental returns. Okay, incremental returns. Successful trading strategies exemplify the following principles of building a trade. Listen, we're going to talk about a little bit of trying to generate success in this, and it's a series of small wins. Okay, now these are going to be some skills that you have to bring to the table. Okay, before we go deeply into specific trades, which I'm going to get to here in the next 10 minutes. Okay, you have to understand these three guiding principles. Everything we do here at TheoTrade, okay, has a reference point back to the guiding principles. Okay, what are the guiding principles? Are you ready? Okay, first of all, trade logic, capital allocation, directional bias. What are these? Okay, trade logic, capital allocation, directional bias. You tell me. So you're going to learn this whether you like it or not. I'm going to beat this into you. As I said, I want you to be able to leave with something tonight that's completely tangible. Something that you can take away and use immediately. And you know what? Some of you guys are brand new. You've never really traded it before, and that's fine too. Hopefully, you don't have to unlearn anything. If you're brand new, you don't have to unlearn anything. We say trade logic, capital allocation, directional bias. First, trade logic. Listen, what that means is you place strategy and trade logic first, okay? You place it first. Now, the vast majority of people involved in the markets, they're infatuated with market direction. You ever turn on CNBC? Come on, people admitting it's the first step. You just saw me. I had to go on CNBC, okay? I had to. Okay. I had to. They made me. I don't like it. I don't like it at all. Because all they ever talk about is, what do you think Apple is going to do? What's Apple going to do? Who the hell cares what Apple's going to do? Because I'll tell you right now, do you think that a trading firm with billions of dollars under management, a real trading firm? I'm not talking about some monkey that has a 401k and he's a monkey manager. What I call a monkey manager is a mutual fund manager. Forget all of that. All right? Because that ain't going to do it for me. Listen, you think a trading firm is going to go out there and go, I think Apple is going up. Let's buy it. They don't do that. All right? They have to have the right strategy. They couple it with established entry and exit criteria. Okay? And they'll tell you time and again, you don't need to be right in picking direction. Okay? It's not about direction in the stock of the markets. You have to have good logic. I'll explain logic here in a minute. Capital allocation. So this is an order. By the way, this is an order of what's important. Trade logic is first, capital allocation, then directional bias. So trade logic, then capital allocation. How and where you allocate capital should be strongly considered as a viable portion of your trading methodology. You're like, what? Let me tell you about capital allocation. Okay? Capital allocation actually takes precedence over being right. Here's the bottom line with capital allocation. Has anybody here ever been a little bit too big in a trade? You're just a little bit too big in a trade and you barfed your guts up? And you know what that means? You bailed out at the worst possible time. You were the low tick in the world, and the market rallied seconds after you bailed out. Has anybody ever done it? Come on. Right? Anybody? Anybody? Has anybody ever done that? Come on, people. There's 1,000 people on tonight. Admitting it's the first step. Nobody ever wants to admit that one. Okay? I mean, come on. There you go. Listen, I'm just saying that if you're not allocated efficiently and correctly for you, you will die trying. You can't do it. Now, last, but not least, directional bias. By the way, the dog that heard a new noise, directional bias. Listen, I'm not anti-charts. I'm not an anti-chartite. Might be a little bit. But I recognize where you think a stock might go. The market doesn't always agree with your sentiments. Okay? How many people honestly like today? Today, the S&Ps rallied. Okay? That means they went up. The market went up today, right? Market went up and went up pretty good. This morning, we heard that we had initial jobless claims of 6.6 million. Okay? That topped last week's 3.3 million, but no, 6.6 million. So we doubled last week's. If somebody had that number in their hand yesterday and told you about it yesterday, you'd have been like, I will bet the house we are going down. That's why I put the dog over here that heard a new noise, because this crap just doesn't matter anymore. Being right directionally cannot define us as investors and traders, for you might not be right often enough. You got to have duration over direction. How and where you allocate capital can define not only losses, but it can be the defining factor in your overall success or failure in the markets. Think about that. Allocation of capital can be a defining factor. Our war cry is duration over direction. What that means, you need to be capable of sustaining trades long enough to be profitable. Do you want to be right? Or do you want to be happy? And everybody's heard that phrase, and my wife actually does say that crap too. All right? I've only been married 10 years, okay? I have not come to the conclusion, okay, that this is the way I do. I fight in the marriage, not in the marketplace. You want to be right, or do you want to be happy? Again, I've not applied it to my marriage, but the logic works beautifully in trade. I will always take the stance. You do not have to be right to make money in this business. Let the volatility do the work. Why, you ask? Experience and watching order flow for decades has taught us invaluable lessons. Okay, now we're going to get down to some strategies. Listen, have you ever been stopped out of a trade or bailed out of a position only to see the markets turn around shortly thereafter? Stop, right? People use stops and so forth. We kind of already asked that question. So let's get down to it. Let's go to a core strategy and trade logic. All right. So now I'm going to introduce to you, okay, a real world strategy you can start using tomorrow. Okay. But before I dive head on into the strategy itself, you got to understand a little bit more about trade logic. Okay. And again, people don't really understand this whole phrase like trade logic. And what trade logic breaks down to, it can be something as simple as, by the way, it's risk aversion, but it could be something as simple as what? Risk versus reward. So let me give you a little bit about trade logic. And once you understand some trade logic, then we're going to forge forward into a strategy to overcome, well, what happens to most people. What happens to most people? One of the bullets that I hit earlier was saying I was going to point out a flaw kind of the marketplace. You want to hear a good flaw? This is a big one. Okay? Listen, when we first learn about markets and trading, we're often exposed to the ideas of risk versus reward, right? By the way, the example that I'm showing you here is directly taken, ripped, whatever you want to call it. I worked, okay, for a fairly prolific trader in 1998. And the group that I worked for had their own education like group, meaning that they trained professional traders. The example I'm showing you is actually one of the very first examples that they showed me, and it had everything to do with risk versus reward. And they basically said, listen, everything that everybody ever teaches you in this marketplace is a bunch of crap. Okay, sit down and look at the mathematics. Risk one to be able to make two. It's a common strategic entrance to the marketplace. But have you ever looked at the probability of success of the idea? How many people have ever done this? Okay, come on. Risk one, okay, to make two. How many people have ever done that? Risk one to make two. Come on. Admitting it's the first step. This is an interactive session tonight. You don't talk, then I'm not going to talk. How many people here have ever risked one to be able to make two? But By the way, this is going to be, if you're a day trade, it could be a monthly trade, it could be a weekly trade. I don't care. It could be a swing trade. You can trade whatever you want. Okay. Risk one to be able to make two. Risk one to make two. How did it actually work out for you? Okay. All right. How did it work out for you? Because it's crazy. All right. I'm going to show you now. Let's debunk it. We're going to debunk risk versus reward because so many people get caught up in this. And this is what I'm talking about with logic. Okay. This is what logic means. So you're going to go out. Okay. You're going to be average Joe. And average Joe goes out. Okay. And buys a $23 stock. We're going to call it a stock. All right. I call every fictitious stock. So we're going to buy a stock at 23 bucks and we're going to set a stop right at 22, right? So what do you got? You got $1 of risk. You got $1 of risk. So right there, boom, you're good. Then you're going to set a target price, okay, of 25. Target's 25. So what can you make? $2. So your risk one to be able to make two. Does everybody understand this? This is a prototypical risk one to be able to make two scenario. Okay. Anybody? I love this. Somebody in the chat goes, Don is pretty tightly wound, huh? Okay. Usually I'm okay, but I've been trapped for about a month right now. And again, it's all coming out on you guys. All coming out on you guys. That's a prototypical risk one to be able to make too. But the bottom line is probabilities in your trading. Let me just ask a very straightforward question. All right. When you look at this and you have this $23 stock, all right, and you've bought the stock and assume you've bought the stock and you set that stop at 22 and you set the target price of 25, right? Okay. So that's up 2 versus down 1. What do you think the probability of hitting the stop order is prior to hitting the target price? What's more likely? Getting stopped out at 22 or making the $2 profit? I want to know. Okay. Think about this for a second. All right. Somebody said, where's the chat? Okay, you're in it. You're in it. I'm reading it. Okay. What's the probability in here? Come on. So what's more likely? Going down $1 or going up 2? Don't you dare tell me this is 50-50. It's not 50-50. Okay. There's a much higher probability of getting stopped out than hitting your target price. Why? Because in a normal volatility fluctuation, the probability of going down $1, okay, is inordinately high versus the probability of going up 2. All right. You guys want to see it? Because this is why I'm telling you, this is what trade logic is about. Options are probabilities. Listen to me. I know that some people are joining us tonight. They're like, he's going to talk about options. No. Okay. So I said the O word. I got the O word out. Right? Don't freak out about options. I don't care whether you trade them or not, but I am going to tell you right now, options market will actually give you probabilities. Options are based on probabilities, and most people are not aware that options are probabilities. Options, okay, whether you trade them or not, can actually help us determining, it can walk you through a strategy and determine the viability and practicality of any given trading strategy. How? Well, what we're going to do is we're going to look at the probabilities in the aforementioned risk one to be able to make two trading setup and see if it's viable over the duration. Now, listen carefully. Okay. Don't freak out. I'm going to show you a kind of a complex page here. You ready? Don't freak out if you're new. Oh, it's hideous. Hold me. Okay. Here, look. When I talk about this, this is not the example I gave you with the $23 stock isn't really an example. It's a company called Twitter. Anybody ever heard of it? It's a company called Twitter. And Twitter, all right, when I took this screenshot earlier today, it was a $23 stock. Okay. What I'm doing is I'm looking at a $23 stock and I go 7 days out. This is an option. Options are good for periods of time. This option's good for the next 7 days. And all I wanted to do is what's the probability? Okay. What's the probability of going to 22 versus going to 25? And you're like, how could you possibly do that? Well, in options, we have something called the probability of touching. Probability touch. Now, let me blank the screen for a second, okay? The probability of touch and the probability of touch. What a probability of touching is, it's the probability any time in the next 7 days of us going to these specified levels. What's the probability of touching 22? Well, there it is. The probability of touching 22 is 73%. So you wanted to know what's the probability of you getting stopped out. Well, if it's the next 7 days, you have a 73% chance. Oh, sign me up for that trade. Because I got a 73% chance of getting, how do I say this eloquently? Stopped out? No, it's total free-for-all. Like, why would you ever want to do that? A 73% chance of getting stopped out. By the way, of hitting your target, it's 44%. Now, of course, everybody always asks, how do you know those calculations are right? Oh, I don't know. First of all, this trading application over here has now sold for over $27 billion because Charles Schwab just bought TD Ameritrade specifically for the trading application. That's worth $27 billion because we figured out stuff like probability of touching. Now, remember, my background, okay, what you're on here is called Think or Swim. We helped build it. All right. And a lot of the calculations, specifically probability of touching, these are some of my babies in here. So probability of touching, by the way, that's before me. I just helped put it onto the Thinkorswim trading application. But the probability of touching is definitive. And by the way, I want to show you something because like, okay, so we took a screenshot off there and there's no screenshot. Okay, look, you want to see Twitter? This is live. This is my account. Okay, for better, for worse. I don't care. I got a bunch of accounts in here. All right, pattern day trader. That's me, baby. That's me. I'm going to close this up and I just want to show you. Okay, look, this is the screenshot, right? Twitter's trading at what? $23. You got volume, you got delta, forget all that crap. Just pull up over here, what's called probability of touch. Okay, look, probability of touching the next 7 days. They move, okay? They do move. But I want to show you the probability of touching is inordinately high on this particular position. You ain't got a chance of being able to make money. Okay, look, the risk versus reward revealed. In the aforementioned Twitter example, the probability of hitting the stop on 22 is 73%. The probability of hitting the target price of 25 is 44%. The risk one to be able to make two scenario, it's a setup for a low probability of disaster. I'm going to tell you what happens to most people. When they start in this business, okay, what happens to them? Okay, what happens to them is they learn this risk one to be able to make two. They learn this stuff and they get stopped out and they get stopped out and they get stopped out and they get stopped out. That ain't good. Okay, it's not good for you. It's not good for me. It's not good for the brokerage firms. Like nobody likes that stuff, right? It's not good for anybody. And I just wanted to stress that to you before we go any further in here. Okay, 73% chance of getting stopped out is an absolute disaster. And the reason I get to that because why did I get to the logic first? Because we have to position your portfolio with the right logic. Okay? You got to get positioned with the right logic. You got to overcome the high probability of being stopped out. So let's get down and dirty. How do you position yourself most effectively without exposing yourself to drastic risks and or a low probability? I don't want a low probability. I just don't want that. Okay? Right now in this marketplace, what's this marketplace? It's a free-for-all. It's a total free-for-all right now, okay? You got to mitigate risk. You got to control risk. You got to control exposure. You got to hit all 5 of these, and you got to hit them on. And when I say you got to hit all 5 of these, okay, your strategy right now has to overcome a high probability of being stopped out. If you use stops right now, you're dead, okay? Number 2, you better define your risk. If you don't know what you're doing in this business, okay, define your risk. Define your risk. Define your risk. It'll keep you alive. Number 3, provides a high probability of success. Volatility is going to do that work for you. Number 4 is the exact same thing as number 2 over here. Limit capital exposure. Limiting capital exposure is actually slightly different than defining your risk, but limiting capital exposure, it's critical for survival. Number 5, never need to buy or sell the stock. I don't want to buy or sell stock. Buying, selling stock right now scares me. Want to know why? Some of them are going under. You better believe it. Some of them are going under. Enter the in-out spread. Now, we are going to talk about options over here. Yes, they're option trades, but in-out spreads are designed to limit exposure and maximize potential with minimal movement in the underlying. And please, fear not options. Option spreads allow us to limit risks without the use of stop orders while providing considerable upside potential. So what I'm going to do for the next 4 or 5 minutes, I'm actually going to explain an in-out spread. Some of you are tuned in tonight. You already understand spreads. Okay, how many of you here can legitimately say you understand spreads, right? Because if you don't, that's okay. I mean, again, we have almost 1,000 people on tonight, and I'm saying, how many people really understand spreads? So here's what we're going to do. If you understand spreads, I want you to understand, okay, why I'm actually going to use the spread. Because this spread is used for the reasoning of logic, and I'm going to show you that. Now, if you've never had any experience with spreads, you need to grab big, broader strokes, just like understand the concept, okay, that I'm getting to. Ready? Let's get down to it. All right, so to begin with, we're going to explain a little bit about the spread itself. Okay, how do we do that? Well, we're going to go out here and we're going to talk about an individual stock. Okay, let's make this, and again, I'm just going to make this a very, very clean, okay, very, very clean spread. Oh, by the way, I'm watching some of the chat room. Been listening to Don for close to 10 years at TOS. Okay, I understand spreads. I actually remember, as crazy as it sounds, I actually remember that name. One of the cool things is when we were at Thinkorswim and TD Ameritrade, if you're on the trading application and you're listening to any of the live webinars, we could actually click on your name and actually pull up your account. I wish I still had those days. Anyway, people were like, he looked at my account? Of course I did. Of course I did. All right. So, whoa, that was a giant dot. That actually looks like the coronavirus map. Okay, I did not mean to do that, but now we're just having fun with it at this point. Okay, yes, we are tightly wound over here for sure. Okay, here we are. This is a stock, and we're going to say the stock. All right, stock, and we're going to say it's trading right at $50. By the way, 3 weeks ago, every stock was trading at 200. Now? No. Now they're all 100 or $50. Okay, so the stock is trading right at $50. Okay, we are not going to own a stock. We're going to have nothing to do with the stock. We're going to trade the options. So the first thing I'm going to do is I'm going to go out and I'm going to buy, okay, what's called a 49 call. I'm going to buy a 49 call. Now, that call is going to cost me money. How much money is it going to cost? I'm going to say it's going to cost me $2. Okay, I'm going to pay $2 for the 49 call. All right, so what's a 49 call? Because some of you guys are brand new. Now remember, this is a $50 stock. Right there, it's a $50 stock. Do I own the stock? No, but I'm buying a 49 call. Now that 49 call is good for a period of time. This is what options are about. Let's say this thing is good for one, month of time. 1 month, 1 month, 1 month. Okay, so now we're getting somewhere. So it's good for 1 month of time. Okay, now what do we do? Well, let's talk about this call before we go any further, right? And when I say talk about the call, okay, what is a 49 call? Well, it gives me the right to do what? Buy the stock at what price? 49. Okay. Okay. So what do I do with the 49 call? Buy the 49 call for $2. Again, what does it give me the right to do? Buy the stock at 49. Do I really want to buy the stock at 49? Absolutely not. I don't want to buy the stock at 49. Okay. I don't want to buy the stock at 49. I just want the right to buy the stock at 49. But if you buy the 49 call, where do you want the stock to go? Up. I want the stock to go up here. I want the stock to go to what? Okay. 100. Now, let me ask you something. If you have a 49 call, it gives you the right to buy the stock at 49. Can you buy the stock at 49? You can, because buyers of options have rights. So if I buy the 49 call, I have the right to buy the stock at 49. But let's say that stock goes all the way up here. To what price? Let's get crazy. Let's say that stock goes all the way up to like $70. Well, if you have the right to buy the stock at 49 and everybody else in the world has to pay 70, what's your 49 call going to be worth? So you tell me, what's your 49 call going to be worth? All right? If you have 49 call, stock's trading at 70, it's going to be worth at least $21. At least $21. You're like, how all but it's going to be worth at least that. Why? Because you have the right to buy the stock at 49. If you had the right to buy the stock at 49, you could buy the stock at 49, turn around and sell it in the open market at 70. So if you bought the stock at 49, sold it at 70, you'd make $21. Everybody got it. Do you have it? But you're paying $2 for that right. And if you're not right, you're going to lose money. Because what happens if the stock doesn't go up? What happens if the stock goes down? Oh, I'm going to lose $2. Oh, that's not going to be fun. So this is the in part of the spread. Now we're going to talk about the out. The out, okay, what's the out? We're going to simultaneously sell, in this case, a 51 call. That's a 5 and a 1. That's a 51. That's not an S1. It's a 5. I swear it's a 5. We're going to sell, okay, the 51 call. And that 51 call is going to be trading for $1. So I'm going to take this down below before I explain the 51 call. So we're going out there, okay, and we're going to buy a 49 call, and then we're going to sell a 51 call, okay? This one, we're going to pay $2 for. This one, we're going to collect $1 for. What am I in this spread for? A $1 debit. This cost me $1. $1, $1, $1, $1. Now, hold on a second. If you're brand new to this, you go, wait, so you're buying a 49 call, which gives you the right to buy the stock at 49. Then you're selling a 51 call. How can you sell something you never owned? Stop! How can I sell something I never owned? You don't have to own it. These are options. Options are about rights and obligations. See, here, I'm giving myself the right to buy the stock at 49. Here, I'm giving somebody the right to take stock from me at 51. You go, but Don, you don't own any stock. You're right. I don't own any stock. But I own the right to buy the stock at 49. And somebody has the right to take stock from me at 51. So if I have the right to take stock from somebody at 49, and somebody else has the right to take stock from me at 51, what's the most I could possibly make in a $2 wide spread? The most you can possibly make in a $2 wide spread is $2. The most you can possibly make is $2. This is a spread. It's done as one trade. You can make $2, $2, $2, $2. But you paid $1 up front for it. You paid $1 up front. So what are you really doing in here? Now, I love to do this example. You know why? Because I'm gonna portray something to you you're gonna hate. In this example, you're going out and you're risking 1. Oh, I don't want to risk 1. To make how much? To make 1. You ever risk 1 to be able to make 1? Risk $1 to be able to make $1. Why would you ever want to do that? Why would you ever want to do it? In this strategy, I'm risking $1 to be able to make $1. Risk $1 to make $1. Risk $1 to make $1. Risk $1 to make $1. Doesn't sound reasonable? Why wouldn't it be reasonable? Why would this strategy work? It's about trade logic. Here's the trade logic, okay? How long is this strategy going to be on for? Let's say it's good for 1 month, 1 month, 1 month. Okay, so if this strategy is good for a month, what can happen to you over the next month? Now, this is a bullish strategy, right? This is a bullish spread. Spread, that's an A. It's a bullish spread. There's a lot going on in this slide over here. This is a bullish strategy. You want the stock to go up. Does the stock go up? Of course not. Stocks never go up when you want them to go up. Where does your stock go? Okay. By the way, let's make this a real example. This is not fictitious anymore. This is you. Okay. Nothing ever works your way. So you know what? You put the spread on the stocks at $50. You buy the spread. You pay what? $1 for it. The stock goes down. Where does the stock go down to? The stock's all the way down now at 43. Oh, it's at 43. Time out. Time out. When the stock's at 43, did you lose? Did you lose with the stock at 43? Okay. Well, I don't know. When did the stock get to 43? The stock got to 43 this week. It just dropped like a rock. It just dropped $7 like today. Okay. It's Marriott. Oh, it's brutal. Brutal. Stock goes to 43. Do you get stopped out? Absolutely not. You don't get stopped out. Guess what? That happened this week. Right? All of a sudden, a bailout plan comes. Bail me out, baby. Stock gets above 51. When the stock gets above 51, golden. You make your buck. This strategy is all about, okay, risking $1 and then against the clock. Risk $1 against the clock. What does that mean? You never get stopped out. You know your maximum risk is $1. But anytime we actually crest over 51, you're going to have profitability. It's a probability strategy. It's about the fact that you don't get stopped out because you're defining your risk to $1. Even if the stock goes down to $30, the stock go to $20, it could still possibly get back. All you have to do is anytime in the next month, you got to get above this. Anytime in the next month, you got to get above this. I cannot stress this enough. Okay? You can be dead wrong. Let volatility work its magic. What's volatility going to do? Market's going to sell off. The market's going to bounce. We're going to laugh. We're going to cry. Okay? We're going to be locked up for the next month or two. Listen, this is what an in-out spread is about. It's okay to risk $1 to be able to make $1. Why is it okay to risk $1 to make $1? Because your probability of making the dollar is substantially higher than risking the $1. Stop right there. Does that make sense to everybody? Because now we're going to do it for real. In-out spreads, Twitter example. Let's continue, okay, with our Twitter example. We were talking about Twitter a little while ago, right? So we're going to continue with the Twitter example. But rather than buying the stock at 23, we're going to use a spread to limit risks and provide a high probability without the use of stops. You ready? Okay, because here's now a real example. So Twitter is trading at 23. Twitter is trading at 23. So what are we going to do with Twitter? Okay, so it's trading right there at 23. What am I going to do? Am I going to own the stock? Absolutely not. I'm going to buy, okay, a 22 call. 22 call. You know what it's trading for right now? Okay, I apologize. It's supposed to say 315. Oh, okay. I'm going to look on the screen and show you for real here in a second. For reals, okay? I'm going to fix this too. Oh, don't. We're having fun now, okay? There's nothing like he's going rogue. He's going rogue over here. Ah, I found it. I found it on slide 41. All right, so we're going to go out there and we're going to risk a buck to be able to make a buck. By the way, I'm actually going to show you the live example just so you know that the exact same price over here, okay? That is the right price. There we go. All right, so I fixed the example. By the way, this what we're talking about right now comes directly from this screenshot. You just bring it up over here. Delete all that. Okay, get rid of that. We actually looked at an example and we're right out here. The price has moved a little bit. It's 325 by 220. Okay, but this is the same spread. So I wanted to show you their real prices in here. Twitter is trading at $23. We're going to buy a 22 call. Again, we're going to buy a 22 call. Now remember, what is a 22 call? What does a 22 call, okay, give you the right to do? It gives you the right to buy the stock at 22. Gives you the right to buy the stock at 22. So I have the right to buy the stock at 22, but I had to pay $315 for it. But then I sold somebody a 24 call. How do you sell something you don't own? You sold yourself into an obligation to give somebody stock at 24. So remember, you have the right to buy the stock at 22. Somebody takes your stock from you at 24. What's the most you can make on a $2 wide spread? Well, you can make $2, but you already paid a dollar debit. So you're risking a buck, okay, to be able to make a buck. Why do I like this strategy? Let's say Twitter is at 23. It dives. Twitter can go all the way to $15. And then all of a sudden, earnings come out. Boom! Stock jumps all the way back up to 25. Gold. You're out with a dollar profitability. This is about, okay, a high probability. This is about probability. That's what these trades are about, okay? And somebody was actually asking, like, commissions, what about commissions? TD Ameritrade now is 65 cents a contract. 65 cents a contract. Do you realize, okay, and I know some people don't even know about contracts and everything. Let me tell you how much this trade will cost you. The trade, okay, this trade can be done for a $100 debit. You know what commissions will cost you? Okay, 65 cents times 2. Well, what are you looking at? $1.30? Okay, it's incredible. It's incredible. We're in utopia right now. It literally is. It's in utopia. Okay, I just cannot stress this enough. If you're not doing this right now, you're going to be taking huge risk. By the way, this is just the example portion of it. Want to see the real trade? I mean, we're going to get to that right now, but this is why you want to use in-out spreads. So again, it overcomes the high probability of being stopped out. Let me go back to this. Are you getting stopped out in this trade? Is there any feasible way that you could get stopped out in this trade? You're like, can't get stopped out. What happens if the stock goes to 0? Did I get stopped out? No, I'll just lose $1. You go, I don't want to lose $1. Well, guess what? You're always going to have risk in the marketplace. I'd rather have $1 at risk than have what? A couple of $100 at risk. People go, I'm going to go out and buy Apple right now. Good luck with that. I mean, seriously, good luck to you. Because in this marketplace, I'm not buying that thing. You got to be crazy right now. I'm going to buy Apple? Oh, I got a better one. Go buy some Amazon. It's almost $2,000 a share. Okay? And it could easily be $1,000 a share. We're in a free-for-all. It has nothing to do with Amazon. If liquidation happens, they liquidate everything. That's what this business is about. Define your risk, people. By the way, I'm showing you right now bullish strategy, bullish strategy, bullish strategy. Forget bullish. Be bearish. It's okay. You can bet against the marketplace, right? So I never use a stop order. I define my risk and limit capital exposure. Do you see me defining my risk? It's $1. Good. Okay? Never need to buy or sell the stock. Did you see me buy or sell the stock? No, I just traded options. Good. Okay? Provides a high probability of success. You can initially be wrong in terms of price movement and still come out ahead. How do we do that? How are we wrong? I'm wrong. And then I'm so very right. But what happens if I am wrong? Good, I'm going to lose $1. I'd rather lose $1 being wrong. Okay, I'd rather wear the badge loser with $1, okay, than be wrong for a substantial amount. And it's important. Okay, it's about consistency, and you got to do this. I'm telling you, you have got to do this, right? You need this in your life because you need it to survive. By the way, this is the real example. So this is the real screenshot taken. And by the way, if you're not comfortable with the screenshot, by the way, I could pull up the real trade. Like this is, again, here's the screenshot 43 days out. Okay. And here's the live trading application. If I do this in the live trading application, I buy one of these, sell one of these. It's trading for $1.02. Okay. This is the actual platform here. It's trading for $1.02. In my example earlier today, I had it at $1. But let's look at it. So all I'm doing here, and I'm taking you through, well, this is it. This is the, the live trading application. Let's actually see just what we're at. So right up here, it's a $23 stock. I'm buying the 22 call, and I'm using 43 days out. I'm buying the 22 call, and I'm selling the 24 call. The whole trade is done for a max risk of $1 debit. That's it. Then what do I have? Okay. Then I just, over the next 43 days, I go, it's selling off. It bounced. Yay. Okay. And you know what's interesting about this? Let me ask you something. How many times have I shown a chart? Somebody goes, but which direction does the stock market go? Listen, calm down, because the market goes up, the market goes down. It's going to barf its guts out. You're going to laugh. You're going to cry. Twitter's down 28%. It's going to bounce sooner or later. I don't know if a bullish strategy is right. Okay. But I'll tell you right now, you got a pretty good chance here on both sides of it. You really do. You have pretty good chances on both sides of it. Now you guys tell me, you give me one. What do you want to do? What do you want to do? Because I did a Twitter example. What do you want to do? Okay. Listen, in-out spreads give you the power to trade massive stocks and index products, pennies at risk. Give me an underlying that you want to do. Oh, Boeing. Okay. By the way, I have a ton of Boeing trades on. I don't care. Let's do it. Let's go over to Boeing. And I'm going to use live trading application over here. Boeing is selling off big. Do you think it's going to sell off big or continue to sell off big? Okay. By the way, I cleared a bunch of Boeing positions out today, just for the record. Okay. For the record, I cleared Boeing positions specifically today. And if you want to see what I did over the last 30 days, this is everything I did in Boeing over the last 30 days. Let me make sure I'm in the right account. Do apologize. Okay. This is everything I've done in Boeing over the last couple of days. Boeing has been an absolute grand slam home run for me. Some of the biggest trades I've ever had. If you look at these, I'm closing positions. These are closing. See where it says to close? Closing positions, $132 credit, $147 credit. Selling options for $147. Unbelievable. Never had trades as big as Boeing. Okay. These are also, though, all of these are in-out spreads. Okay. And ironically, what's today? Today is April 2nd. I'll show you this trade in a little while. Okay. I closed a bunch of different trades inside of Boeing today. If you want to do this trade in Boeing right now, let's do it. I don't know. We can come out to May over here. Buy one of these, sell one of these, 220. Done. That's a bearish trade in there. Done. It's that easy. By the way, you can see everything I've done in here. And again, I like to show my account. I like to show everything I've done in the account. I didn't trade all that heavily today, but a couple of orders filled. Okay. A couple of one lots in Boeing, a bunch of different one lots though inside of Boeing. So that's trade, people. Now I'm going to show you another big one because you can trade massive stocks, pennies at risk. You just saw a trade on Boeing at $220 at risk. Want to have another fun one? This is what we call Amazon. Is it big enough? Is it scary enough? Because I wanted to find like the biggest, scariest thing possible. Because you know what's scary to me? Someone that's listening tonight owns Amazon. Okay. I guarantee you do. In fact, I'm going to tell you, okay, most of you actually own Amazon in some type of a fund, but some of you just own shares of Amazon. Why? It's almost a $2,000 product. It's not going to be immune. If this marketplace continues to sell off, if the economy tanks, this is not going to be immune. It has, by the way, please, it has nothing to do with sales on Amazon. I don't care about that. When people start liquidating crap, they sell stuff, whether it's good, bad, indifferent, it doesn't make a difference. Amazon's trading for $1,916. This is a 1920, 1915 spread. The spread, okay, is a $5 wide spread. So this is a little bigger. I showed you a $2 wide spread, but this baby's a $5 wide spread. It has a max risk of $230. So if you do one contract, that's a one lot. Captain, one lot rides again. It's $230 of risk. So if the stock goes down, you make money. By the way, you see this right here? Do you see what that says right there? It says POS. Okay, that means I have a position. What do I have a position in? I have this position on right now. Okay, I don't show crap that I don't do. Boeing, I already closed that one. But Amazon's live. I only have 15 days left, but I'm deep in the money. All right, this is a profitable trade already inside of Amazon. Just waiting to hit my my target in there. Okay, people, this is what trading is about, and I just cannot stress that enough. This is what trading is about. $230 of risk. By the way, it doesn't have to be $230. Let's exemplify this for just a second. Instead of doing this one contract for $230, could this be $2,300? Of course it could. It could be $23,000. I don't care any way you want to look at it. This spread is less risk than this garbage over here. Buying the stock, okay, total free for all. By the way, people go, but buying stock is free. Okay, yeah, you know what you get? You get what you pay for. So pay the 65 cents a contract and don't ever complain about the commissions. Don't ever let me hear you complain about commissions. I started in the brokerage business in 2001. Used to be like $20 to do a spread when I first started. That's why Thinkorswim got started, to change the entire industry. Now the crap is basically free. It's unbelievable. It's utopia for trading right now. And that's where, again, we didn't even look. We didn't even look at the chart on Amazon. I didn't even look at a chart. I don't care. I have a bearish position on Amazon. Amazon could come down. Amazon's only down 1%. Oh, I apologize. Amazon's up 1% on a year-to-date basis. Amazon could rally. It could sell off. You're going to laugh. You're going to cry. It's got enough volatility to get it done. Listen, these are trades that I have done recently. And I want to show you a couple of my trades. First of all, this is a QQQ because people always want to know where can I do some trades. And I told you, I'm showing you trades that I have on right now. I just took off the Boeing trade. I have on the Amazon trade. I've got a Microsoft, in-out spread on. Okay. Again, I could go all night long. I have an HYG spread on. Okay. In this particular trade that you're looking at right here, and I'm going to highlight this for you so that everybody's comfortable. I opened it on February 6th. I closed it on February 24th. This is the precise time. Okay. This is the QQQ, which is the NASDAQ 100. Every $80 I invested, I got back 139, right? 80 cents paid, $1.39 credit. It's a 74% return. Okay. 74% return. You're like, oh, okay. But this could be $800 to make $1,390. Right? So that's, again, it's just an in-out spread. Next one I'll show you, JP Morgan. JP Morgan was opened February 6th, closed February 25th. $81, okay, to make $159. That's it. $81 invested, I got back $159. It's a 96% return. Okay? We're just moving right along. Is everybody comfortable with this so far? Okay? Because now we're going to move a little bit more recent. So I just wanted to show you a couple of the trades we've done. Amazon. Look, the open and the close, it's the exact same day. The open and the close is done the same day. Every $225 I invested, I got back $307. It's a 36% return. I'm putting on a spread. The market moves so rapidly in one trading session. Okay? Not even a full trading session. What is this? 6 hours? 6 hours. Okay? For a 36% return. Okay? Did I expect that? Absolutely not. I want to show you. Okay? Look at that day in Amazon. Look at the day in Amazon. That trade was done on March 20th. That's it. That was March 20th. Okay. I put that trade on somewhere in this neighborhood here, and we came down here, and it was a party. Okay. I could have made more. I could have been somebody. I didn't know the stock was going to sell off. You know what the irony is? The very next day, the stock rallied huge, and then rallied again, and then sold off again, and then rallied again. These things can be traded in and out, in and out, in and out. Okay. And by the way, look, here, this is a put spread. That's bearish. Here, this is a put spread. That's bearish. How hard is this right now? Okay. Costco. Oh, why Costco? Costco's the greatest stock ever. You can buy enough toilet paper to build a castle in your house out of it. You know what? I actually like the idea of being bearish. Okay? I think people are freaking nuts buying all the toilet paper. Paper towels I kind of get, but toilet paper, we're losing it. Huh? Anyway, you start looking at this trade. Every $211 I invested, I got back $335. Okay? It's a 59% return. Now, if you're looking at the returns and you're probably thinking at this point, how do you know when to get in? How do you know when to get out? Those are the questions you want to ask. Why? Why? Why 59%? Those are the questions you want to ask. Okay. Everything in here, okay, is for very definitive reasons. There's rules behind it all. But this is Costco, and I wanted to show you. You could do a bearish spread in Costco, and if you haven't looked at Costco lately, and again, I like to show some charts on here. Okay, I'm not an anti-chart type. Costco has actually fared extraordinarily well. Yet I have bearish trades on here, and I'm making money. How is that possible? Because lately it's been actually going up here and kind of came down. You only need one down day. I figure sooner or later that down day is coming. So what do? Is this recent enough for you? This is in the middle of a crash. In the middle of a crash, I'm putting on bearish trades. Listen, maybe we're going to rally, maybe we're going to not. And I like Costco so much, I did it again. I just wanted to show you. This was open on the 17th, closed on the 24th. This one was opened on the 11th, closed on the 24th. This is still another Costco trade. I just did 2 trades on Costco back to back. This is every $110 I invested, I got back 177, a 61% return. By the way, I want to show you again. I have tons of trades on stuff like Costco. Okay, if you want to see everything I've been doing on Costco, all I have to do here is pull it up. Okay, these are the trades that I've been doing on Costco. There's $1.10, $1.10. Okay, $3.35, $1.77. These are the trades. These are the opening positions, the closing positions. Again, I'll show you everything that I do. Every single trade that I am showing you guys right now was done live. And when I say live, these are trades that have actually been texted out to our clientele. Everything I'm showing you has been texted out. Some of you guys have even caught these on evening videos. Sometimes in the evening videos, I'll just do like one of the trades. Not all of them. I'm telling you, there's a lot more trades. Here's one on Microsoft. In Microsoft, I opened it on March 19th, closed it on March 20th. It's one day. Every $211 I invested, I got back 301. Remember, this could be $2,110 to get back, okay, $3,010, 43% return. Okay, it's 43% return though in one day. Microsoft, by the way, I have another Microsoft spread on right now. Here's a fun one. Okay, members are saying, Ray Dossett, another great trade done. Microsoft spread. Thanks. By the way, I just wanted to show you the date of this one because we just keep getting in, getting out, getting in, getting out, doing the trades. And I'm trying to find every single comment from a client, okay, to me has to be in the last like week or two or it ain't worth it, right? Now, here's Boeing. This is actually what I've done in Boeing, okay? Boeing has been a grand slam. I mean, we just keep hitting trades on Boeing, and re-upping. This is actually a trade. And I like to be recent. I opened it, okay, on the 25th. You're like, oh, when was that? When was that? It was like Wednesday? I closed it today. That's today, all right? It's April 2nd. Every $238 invested, I got back $362. It's a 52% return. And again, I wanted to be recent. So recent, this is what our members are saying. Okay, Alex Stevenson closed Boeing for a 357, okay, credit. Basically for 357. Look, I got out at 362. Alex got out for 357. Mary Ellen filled, okay, Boeing, April, 145, 140. Take a look at my spread. 145, 140. Okay. This is actually the spread for a 363 credit. Oh, you know what's ironic? Mary actually beat me on that one. Okay. Mark, 55% on Boeing. He beat me too. Sada, actually 357. Check this guy out. Okay. Out of Boeing, 364. I mean, just home runs. By the way, I took all of these and I wanted to show you on this screenshot over here. All of these. Okay. This is today. Okay. Today. The exact same time. Because we were entering and exiting the trade. Again, if you look at the time I traded this thing, that's it. I mean, that's when we basically were telling people, get in, get out. And that's when we text out trades. Now, last but not least, Visa. Okay. I thought this one was also kind of a layup trade in here. I put it on the 30th, exited it yesterday. This was yesterday. $7 debit, $1.52 credit. Every $107 I invested, I got back 152. It's 42% return. People, it's just trade after trade after trade after trade. I'm telling you, what better time? Okay, learn a skill. Learn this skill. It'll last a lifetime. Okay. And the other aspect, when will you ever have time like this again? You're quarantined. You know, if there's one thing we're sure about today, you're quarantined. Half the planet is locked down right now. Listen, if you're still working, it's fine. Just do it part-time. Okay? But you're sitting at home. You have the time. You can sit in front of the screen right now. You don't have anybody breathing down your neck. If you're quarantined, this is how to emerge stronger, okay, and in great financial shape. I'm telling you, don't go out there and buy any stock right now. It is dangerous. You have got to learn to use these spreads. What our members are saying, and I appreciated this. This is actually March 27th. Jamie G, plus 55% to start working out from home. Everybody's working from home right now. I love this. Okay. GHS, good morning, all. Another day of work from home. Thank goodness for TheoTrade to keep me sane. I fully appreciated this one. But if you've got no time, okay, it's not a problem. Every trade that I showed today, every single trade was displayed live at TheoTrade. We texted out the trades. The trade results we're showing, they're perfect for part-time. This is not like heavy amount of work. These are put a strategy on, take it off. You can actually use what we term set it and forget it. This is what we term good till canceled orders. Okay, if you're not familiar with that terminology, okay, set and forget. It's good till canceled orders. Good till canceled orders, basically you just put the order out there and just leave it in. A fraction of your time is enough to see results. Like you don't have to be glued to the computer is all I wanted to point out over here. Now, a couple of characteristics of these trades. First of all, I think you'll agree that the attributes of high probability in-out spreads are just undeniable. Listen, you never have to buy or sell the stock. You don't have to buy or sell the stock. You define your risk. Risk is limited to precisely your comfort level. You don't need a stop order. Okay, you can vary the time frames and not pay more. Did you know that you could do a spread 3 months out and not pay more? Okay, options are supposed to cost more the further out you go in time. Not if you know how to do these spreads. The probability of profit is extraordinarily high. It's the perfect spread, though, to reduce risk of a stock portfolio because you don't have to own the stock. And it's a great tool. Okay. You know what? I put on here, it's an excellent tool for seeking returns to build a smaller account. How about build back an account? I think that's a fair statement to make. I mean, this spread's being done for $1. Listen, don't let options intimidate you because you have to learn to build these spreads. And there's a lot of people that are tuned in tonight that are like, I already know how to do this. You don't, okay? Because I'm going to tell you right now, they think they know how to do it. And first of all, those of you that have no options experience, don't let options intimidate you. The spread below is being done for $1 debit. But spreads, okay, these things are like power saws, okay, in the marketplace. If you use a power saw correctly, it's going to be fast, it's going to be efficient, it's going to get the job done, right? If you're going to build a house, use a power saw, you make the cuts quick, clean, okay? But if you don't know how to use a power saw, you're going to take off a couple of fingers, right? Options are the exact same thing. They're going to be the quickest, the fastest, the safest, the easiest way to get where you want to go in the marketplace. But if you don't know how to use them correctly, you're going to lop off a couple of fingers. Know your spreads. Know how to use them. You can do in-out spreads. Maybe you don't have any options experience. Maybe you have limited experience. Don't let the options again intimidate you. And I always stress that because you need the strategies for the foreseeable market future. You're not going to pick a bottom in this marketplace. You're not going to survive. All right. And listen, if I can get through to a couple of you, you will not survive going out there and trying to pick bottoms. You're going to have to use defined risk strategies. Now we can show you and get you ramped up to how to trade options and more appropriately, how to use in-out spreads. It's a matter of a few hours. But the definitive factor here at TheoTrade, we give you detailed recipes for every trading strategy. What's a recipe? It's just like a recipe. You bake a cake with a recipe. Okay. Do you bake a cake with a recipe? Of course you do. Unless, of course, you've baked that cake 50, 60, 70 times. Okay. You wouldn't bake a cake without a recipe. Why do you trade without one? You must have recipes to building trades. Again, you must, okay, have recipes to building trades. And I stress this again. All right. Listen, this is what you need to successfully enter and exit. Because people always ask me, oh, well, what's the recipe? What's the recipe for the in-out spread? Well, here it is. Okay. What makes a viable in-out spread candidate? Like, what's a good candidate? You just saw I did the QQQ. I did a little bit of JP Morgan. I had Amazon, maybe some Microsoft, a couple of Boeing trades, some Twitter. What makes that candidate? How do you decide that? Well, what volatility should I seek out? You have to know the precise volatility. Too much volatility, spread won't work. Too little volatility, spread won't work. What options expiration do I select? Should I do a month? Should I do 2 months? What if earnings is coming? Should I do it for 7 days? Should I do it for 27 days? Have you guys looked at an option chain lately? Have you looked at an option chain lately? This is Costco, but want to have some fun? Go look at the spiders. What are the spiders? It's an ETF. There's 1 day and 4 days and 6 days and 7 days and 11 days and 13 days and 15 days. Look at all these options. Okay? Which one do I use? You have to know precisely which one to use. All right? What should be the delta of the option I buy? You're like, well, I don't even know what delta is. Good, we'll teach you that. What options do I sell against my positions? You got to know what to buy, what to sell, what volatility to use, what underlying is right, what's the liquidity, how do I even build the trade? How do I go about building the trade? What's the right amount of risk for me? Let me show you what we do here at TheoTrade. TheoTrade creates recipes in trading. We create checklists, okay? Definitive checklists. The way to explain this to you, you're a pilot, you get into an aircraft. You don't just turn the key, with a little rabbit's foot on it and hit the gas and go for it. Okay? You have checklists. You get on an aircraft. Nobody's getting on an aircraft right now. This is a terrible analogy, but you get in an aircraft. Have you ever watched a pilot? What do? They just sit there and they actually go through the checklist. They get up, they walk around the aircraft, they literally go outside. They're like pulling on the engines like a monkey. Okay? They're looking at every single aspect of it. This is what you have to do in trading. Okay, there's variables in trading. What if the stock goes up? What if the stock goes down? What if this happens? What if that happens? What do you think a recipe is? Trading is all about answering the what ifs. What might be a good stock or ETF candidate for an in-out spread? What's the correct options expiration cycle to buy my in-out spread? How much capital do I commit to these in-out spreads? Based on your account size. What strike price options do I buy and how many do I sell? In growing a small account, what should my allocation? Small account is different than a big account. We have the answers. That's what we do here. We build recipes, definitive criteria, checklists for each strategy, each unique variable you're going to encounter. And as I said a moment ago, we have the answer to your questions. We'll give you the right probability for the trade. How many option contracts? When do I close the spread? What if the stock sells off big? Okay, what we actually build in these checklists, we build like a flow chart. What if we go up? What if we go down? I mean, first you got to get in the trade. And after we get you into the trade with all the right criteria, then we have to manage the trade. We have to get you out of the trade. You got to know if it goes stock, it goes up, if it goes down, if dividends are coming. What if we rally huge? Can I fix a losing trade? It's the how, it's the when, it's the why, it's at what price. It's just the beginning of the variables you're going to face while buying an in-out spread. Okay, it's the beginning. Listen, you can read what a spread is. Some of you joining tonight, maybe you even know what. Maybe you know how to build a spread. You can Google it right now. I would like to know what a spread is. Anybody can figure out what a spread is. You read a book, figure out a spread. You don't even have to read a book. Go online, figure out a spread. But that doesn't give you, okay? That doesn't give you a recipe. That doesn't actually give you criteria. You need the recipe for success. How do we do that? It's 20 plus years of trading experience. We had access to client order flow for over 15 years. We viewed and studied millions of trading accounts. We ran the education, okay, for 15 years at a firm with the largest options order flow in the industry. A lot of the criteria that you're getting in here comes directly from that experience. Criteria is the recipe for success. Following strategy, the in-out spread, and corresponding criteria requires the utmost attention to detail. You're literally going to have to go through a checklist. It's not that huge, okay? 9 steps in the way in, okay? All the different variables in the way out, but we spent years fine-tuning this trade setup and criteria, okay? When we approach the section on criteria, follow the steps to build the trade. We offer a guide to small account growth with in-out spreads. I am the trade instructor. It is a 4-hour course, okay? It is available immediately. This one, we put it in the can. What that means, okay? We have archived material just like Netflix, and you can stream it literally now, tonight. The class has a slide deck that includes the entry and exit criteria. It's the checklist. It's available immediately for download. The course is archived 24/7. And we actually give you access to our mobile applications. If you can't watch it on a computer, you could watch it on an iPad. If you can't watch it on an iPad, you could watch it on your mobile phone. We have an Android app. We have an Apple app, okay? Any device out there, you can pretty much run this and watch it. And again, it's 24/7. You can even download it. You can download it and watch it when you're even offline. The class is $497. And this thing is going to save you more than $497 the first time you execute a trade. Tonight, given some of the circumstances, we're going to offer you a couple of bonuses in here and change the entire way that you think about these in-out spreads. You hang with me for a second, because I'm going to tell you right now, we're going to make this worth your while. This is the curriculum. When I say the curriculum, these are the points taught in the small account in-out spread, course. This is about, growing your account. Listen, the first thing that you're going to learn is you're going to learn to construct in-out spreads. Easy to learn, easy to do, and easy to place. Number 2, how to buy longer duration options without paying more so you can give yourself the gift of time. Number 3, how to use defined risk-reward strategies so you never have to lose sleep over your position again. You're going to know, I have $1 at risk. I can sleep. Number 4, in-out spreads are used in any market condition. You know what? They're better in volatility. Plain and simple, they're better in volatility, because volatility, you don't have to be right. Number 5 over here, build your own in-out spread. Part of this course in 4 hours, we get you to a point where actually, this is how you're going to build your in-out spread. Now, I know some people, are like, well, I've never traded an option. Don't worry about that. We got you covered. You never traded an option? We're not just going to kick you out there and be like, take this course. We're going to ramp you up. And that's the point I'm going to get to. That's why I said we have some really nice bonuses for you this evening, for the $497. Build your own in-out spread, detailed step-by-step entry and exit criteria. Number 6, in-out spreads easily managed. A big portion of this class, set and forget order types. That's what we term a GTC. Number 7, in-out spreads can be done with a trading account of $2,000. You don't have to have any more than $2,000 in the account. Trades can be done in retirement accounts. I'm doing it in retirement accounts. Every single screenshot that you just saw was in a retirement account. Minimal options experience and smaller accounts looking for large upside potential. By the way, if you have no options experience at all, don't worry. We'll get you through the brokerage firms. Somebody said, does it work on futures options? Of course it does. Capital allocation. Step 9 is critical. Position sizing. Techniques to grow your account. Listen, number 10, we just teach you to follow the recipe to be able to build a trade. That's some of the curriculum that you're going through in this particular course. And again, if there's a course that you need for volatility, this is it. We've done 88 different classes here at TheoTrade. 88 different classes. This is the number 1 class you have to go through. Why? Because in-out spreads are going to keep you alive. They're going to keep you profitable. They're going to keep you consistent. They're going to keep you from getting killed in that volatility. Now I realize, some people are a little newer tonight. You want a bonus. Everybody wants a bonus. Listen, I've been around this industry since 1998, but I've been around the industry my entire life. But when I was at Thinkorswim, when I was at TD Ameritrade, we have seen, when I say we, there's a bunch of us here at TheoTrade. We have 7 full-time instructors. There's a bunch of us here at TheoTrade that we actually pulled from TD Ameritrade, or pulled from some of the brokerage industry, and a couple of professional traders that we pulled from, the trading industry. We have seen everything in our careers, everything in the education. There's so much crap out there. And I'm just going to tell you right now, at TheoTrade, we go beyond it all. We go beyond one class or one indicator. Can't stand that. Bottom line is, we know what you want. You want everything to trade and invest at one place and at one price. What I'm getting at here is, you take a class that's $497, then somebody comes back and they go, you need an indicator with that class. You go, okay, how much is the indicator? They say, it's $497. You go, okay, so I bought the class for $497, then I paid for the indicator for $497, but you have to take a class to learn how to use the indicator. It is absolutely ridiculous. We're done with all that crap, all the pitches. We know what you want. You want everything. Trade, invest at one place and at one price. Bonus number 1, we give you access to all 88 trading classes. We give you access to every class that we have ever done here at TheoTrade. Why do we do that? It's the only thing to do. Come on, you can't just go out and be like, take this class, it's $100. Take this class, it's $300. This nickel and dime crap will not stand. You will never find an archive anywhere in this entire industry, for that matter, that is anywhere near comparable to what we have here at TheoTrade. We'll put our money where our mouth is all day long on that one too. We will give you the guide to small account growth with in-out spreads. The in-out spreads class, it's archived. It's available immediately. Then we will give you access to all other 88 trading classes that we've done. When I say all classes we've done, who? There's 7 instructors here. I'll introduce you to them in a minute. We had a class just a few weeks ago. It's called Guide to Surviving and Thriving in Extreme Volatility. You think that might be a good class right now? Absolutely. We have Growing a Small Account with Black Book Spreads. How to collect income being short. The next big short, this is the risk twist spread. You saw those risk twist spreads. Okay, Guide to Selling High Probability Spreads, Iron Condors for Income, Selling Premium to Minimize Your Risk, Day Trading NASDAQ Futures, Covered Calls, Essential Skills for Consistency in Trading Class, Top 10 Trading Skills to Growing a Small Account, Pairs Trading. People, I'm scraping the surface. There's 88 classes in the archive. We're going to give you access today, now, to over $9,000 in classes alone. Because as I said, it's the only thing to do. Right? You know, I don't know what genre of trade you're going to be into. By the way, you want to learn about charts and technical analysis? Let me introduce you to a couple of our instructors. This is TheoTrade. Okay? We, as I said, have 7 full-time instructors. Here's 6 of them. I'm the 7th. Those 88 classes I mentioned, that's just not me. This is not the Don Kaufman show. By the way, we have Jeff Bierman. Jeff Bierman, he's an analyst trader and a former chief market technician for TD Ameritrade. If you're unfamiliar with Jeff actually built over half the studies in the Thinkorswim charts. Okay, you owe him a debt of gratitude. Most of the studies on the Thinkorswim charts came from Jeff Bierman. By the way, Jeff Bierman is also a professor of finance at Loyola in Chicago. So he moonlights with us here at TheoTrade. I've known Jeff for years, obviously worked with me at TD Ameritrade. He worked with me at Thinkorswim. Next in the list, Matt Williamson. He's a market neutral. He's a premium selling option strategist. Next, Corey Rosenblum. He's our senior strategist and resident swing trader. This is somebody, he's in, he's out, he's all over it. Okay. Brandon Chapman. Brandon is somebody else that worked with us at TD Ameritrade. He's our CMT, macroeconomics, technicals, and fundamentals. I like to tell you, though, this about Brandon Chapman. Brandon actually wrote much of the educational material, okay, that was provided, okay, at TD Ameritrade. And most people do not know this about Brandon. Brandon actually wrote a course that was an 18-month long course. TD Ameritrade used to charge $24,000 for that course. I'm just curious in the chat, if you guys know what I'm talking about, it was $24,000 that you paid out of your own pocket to TD Ameritrade, and they give you 18 months of training. Yeah, well, we have the instructor here that wrote that book. Think that's worth it? Okay. Next on the list, we have Steve Slim Miller. Okay. Slim Miller, there is nobody that understands cyclical analysis better. 43-year veteran. Okay. Options and futures trader. Steve actually started, I've known Steve since I'm a kid. He started on the floor of the Chicago Board Options Exchange, okay, when it literally started. Last but definitely not least, Tony Rago. We have a futures trader. He's there all day, every day, calling out different futures trades throughout the course of the day. What I just said, again, all of these instructors you have access to and all of their courses you have access to. That's the first bonus. Decent? Okay? Again, it's access to over $9,000 in classes alone. Bonus number 2. All access TheoTrade VIP membership pass for free. What we are doing here, we're going to give you 3 months. Okay. As I said, we don't just give you a class. I just don't like this. Here's a class and kick you out there. We're going to give you 3 months unlimited access to TheoTrade. We call it TheoStream. What is unlimited access to TheoTrade? First of all, okay, people go, 88 classes. 88 classes is a lot. Yeah. Well, you have 3 months. 3 months to watch them. You also have access to a live trading chat room. We broadcast 6 hours per day minimum. Can you watch 6 hours a day? Right now you can. Our traders provide real trade ideas, real-time market insights. So if you want like the trades that I just gave, you don't pay any more for that crap. We just do it. We do text and push notification trade ideas, including in-out spreads. We have 5 different trading portfolios that you can follow. We also have daily coaching sessions with timely topics and stocks, options, and futures. And you're going to love this. We actually answer emails. I started with that tonight. We answer your emails and answer them directly. You can email us and say, hey, Don, I'm thinking about doing, this Apple trade. Is it a good trade? We'll email you back. And actually people go, can I ask real trading questions? Of course you can ask real trading questions. What do you think this is about? They go, I thought it was supposed to be fictitious. No, you can ask real trading questions, right? Most of us have actually been to the brokerage industry. I've held a Series 3, a Series 4, a Series 7, a Series 24, my Series 66. You want fries with that? Okay, we know how to answer trade-related questions here at TheoTrade. We're going to give you access to all of this. It's $997 to support trades and insight. I'm telling you, okay, bar none, no one at any cost has this kind of accessibility. Nothing is like TheoTrade. 6 hours a day. Maybe you can't watch it live. Maybe you can't sit there 6 hours a day. Don't worry about it. We recap all of it. Okay? We actually give you access to archives. You can even play back the archives at 2 or 3 times the speed. By the way, I'm not done yet. Okay? So what are we giving you? 88 classes. Then we're giving you 3 months access to a live trading room. We're giving you access to our traders to answer your emails. We'll actually text and push trades out to you. There's daily coaching sessions, which is continuing education. I'm not done because we're also going to give you 59 proprietary indicators and scans. We're giving you the whole suite of indicators that we have. We built indicators. We built indicators for you. Auto expected move. That right there, that's the mother of all indicators. Nothing has ever been built that is anywhere comparable to that indicator. S&P 500 gravity points, TheoTrade RSI Laguerre, Quantix, NQ levels, next generation squeeze indicator, a complex position tracker, IV rank versus IV percentile, Theo Quant, unusual put options activity, Sizzle index, SPX expected moves. Speaking of which, 5 minutes, I'm actually going to give you this, the SPX expected move. We're going to give you that tonight, but this is another $1,800 in indicators and scans. Okay. We are giving you this. Why? As I said, okay, there's no more nickel and dime crap here. This is what TheoTrade is about. TheoTrade includes everything you need to invest in trade. And I mean everything you need to invest in trade. We give you classes, right? We give you coaching sessions. We give you email access to our instructors. Okay. We give you a live trading chat room. We give you indicators and scans. We give you mobile access 24/7. It's everything you need to succeed. I always ask people, what else are you going to need? And I'm dead serious with that. What else are you going to need? Because you tell us, because we'll provide it. That's what we do here. I mean, that's what we're built to do. What we've really built at TheoTrade, it's the Netflix for traders. You name a genre of trade, we'll offer it. Okay. If you need psychology in your trading, yeah, we have somebody for that. That's actually Slim Miller. Okay. If you need somebody that trades futures, yeah, we have 2 of those instructors. If you need somebody for technical analysis, yeah, we have Jeff Bierman. Okay. If you need somebody for options, guess what? I'm your resident option geek. I need somebody to understand ticks. It's Corey Rosenblum. I need somebody to understand macroeconomics. Well, macroeconomics, guess what? We have Brandon Chapman. We also have Jeff Bierman, who's a professor of finance. You can pay $42,000 for him, okay, at Loyola, or you can see him right here at TheoTrade. That's what we built, is the Netflix for traders. Tonight, total Theo, it's $297 for 3 months. That includes everything I just talked about, okay? Tonight, it's $297. Listen, everybody, including myself, is in the exact same crappy situation right now. It's $297 for $3 for 3 months. $297 for 3 months. And when I say we're all in the same crappy situation, we're all quarantined, we're all sitting here, at least learn something. Okay. And people are always going to ask this question. Is this a membership? It's absolutely not a membership. You pay $297. Okay. If you love us after 3 months, what happens after 3 months? I don't know. Do it again. You want to pay $297 after 3 months? We'll love you again. I'm going to tell you right now, you're going to love so much what we do here at TheoTrade. People don't want to leave. If you do leave, you're going to be back. Because for $297 for 3 months, I'm going to tell you right now, we have just shy of 5,000 people on our platform. There's 5,000 people. Here's everything that's included tonight. High probability in-out spread class. It's archived immediately. You can stream it tonight. It's included for the $297. Access to over 88 trading classes. It's included for the $297. We also are going to offer new monthly classes. Okay, how many more classes are going to come out? Every month there's another class. We're not going to be at 88 classes. By the end of this, we're going to be at about 91 classes. We have a live trading chat room. Traders are providing real trade ideas. We're broadcasting 6 hours per day. I know you can't always do that all day, every day. Okay, but you're going to enjoy it. And I'm telling you, maybe you tune in an hour a day. By the way, I'm on the first hour of every trading day. We give you indicators and scans. There's 59 proprietary indicators and scans. We email out trade ideas, okay? We've moved to text messaging and push notification on our mobile app. Okay, we have daily coaching sessions, timely topics. We talk about stocks, we talk about options, we talk about futures and options on futures. And our instructors are going to directly answer your trade-related questions. But wait, you see this bottom right there? I put a lot of weight into this. Okay, I'm going to make a quick argument. Just answering your trading questions is going to save you more than $297. And I don't care right now. Okay, I don't care whether there's 1,000 people on here or whatever. Okay, we're going to answer your questions. I don't care if I have to sit here for 10 hours a night. Go right now to TheoTrade.com/IN. It's TheoTrade.com/, IN. Okay, so invert Nancy. I don't know what I is supposed to be. We're also going to top this off a little bit with one aspect. I think this will make it actually easier for people to hop on here to TheoTrade. Again, it's not a membership, but we're going to actually make this a completely riskless trade. So let's break this down. Tonight, everything you need to start trading from novice to expert. In a minute, I'm actually going to show you a little bit about TheoTrade in just a minute. I'm going to show you what the site looks like. You know, people always, well, what am I getting over here? I'm going to show you TheoTrade. When I say this is TheoTrade, this is TheoTrade. Like, this is what it looks like. We're going to talk about the chat room. Okay, all the different traders in here. We're going to talk about, navigating the chat room. We'll get to that in a minute. Before I do, I want you guys to know something. We'll give you a money back guarantee. Trade with us over the next 3 months. If you're not satisfied, okay, we get it. Just email support@theotrade.com. Provide us the details of your trades. Receive a full refund. By the way, we don't define what satisfied is. And I want to make that really clear. Okay, I can't stress to you this enough to you. We're talking about $297. And I know some of you guys listening tonight, you may be even out of a job. It's $297. Okay. If you're in this business, you're going to lose more than $297 on one trade. On one trade. We give you a money back guarantee. Okay. And we do this because we want people to be satisfied. We don't want anybody pissed off after 3 months. If you're not happy after 3 months, give us the detail of your trades. Get your $297 back. It's $297. Okay. And I hope that if you're not satisfied, you still leave here and we shake hands. Okay. All right. You're not allowed to shake hands anymore. Okay. We'll wave at each other. There's some money back guarantee stipulations. You have to do 10 trades using our criteria in the next 3 months. By the way, I will do more than 10 trades in the next 3 months. Your initial account value has to exceed $2,000. You must follow our criteria. I put this in here because people are like, I did something and I just made it up. Listen, all I'm doing is making this totally fair for you and totally fair for us. You want your $297 back, that's fine. But don't tell me you didn't do anything. And please, provide real account statements. This ain't paper trading, people. All you got to do is do 10 trades. Do 10 trades, follow our criteria. Okay? Do 10 trades, follow our criteria. If you're not happy, you get your $297 back. Just email us. That's it. Okay? We'll love you. We'll still love you. Listen, get into TheoTrade now. We're going to work with you directly. Now, on the riskless deal, there's 30 spots. That's it. There's only 30 spots. Why? We have to go through, okay? Think about this. We have to go through and actually reconcile some of the trades. People are going to email us and say, I'm not satisfied. We have to reconcile the trades. We'll do this for the first 30 people that are enrolled tonight. First 30 people. It's a matter of trade size. Listen, we trade live. We give you unlimited email mentoring. Send us your trades. The $297, it's never been available before. We do this, okay, obviously to give you guys a little bit of incentive. It's an incentive, but there's absolutely no risk. And I want to reiterate once again, and I'm going to do this a third time tonight, okay? Everything I just talked about is $297. And again, it's completely riskless. If you want your money back after the 3 months, that's fine. And it's not a membership. Listen, what our members are saying, and then I'm going to take you over to the site. What our members are saying. Okay, this is Brian. This is on March 16th. Don, wow. Okay, I want to again say thank you for what you have taught me in the last 2.5 years. I bought into what you taught about risk twist spreads and duration positions and started to trade options almost a year ago. I missed out on the last market move up, but at the moment, my IRA is up almost, it's 14.8% for the year. I just want to make a quick point. Okay, this gentleman, Brian, is up 14.8% on March 16th. What I've invested in TheoTrade has been so worth the money. Thank you. Okay, how many people can actually say that they're up almost 15%? Almost nobody. Okay, another one. Okay, this is actually from Chris. Don, I've learned more in the past 4 weeks managing and defending my portfolios than I've learned in my entire life trading. Okay, nothing I've learned would have been possible without having tuned into your teachings for the past 2 years. Also, my atomic hedge, okay, took a large sting out, okay, of my long-term IRA destruction. I mean, like, this person would have been completely decimated had they not had this atomic hedge on, okay? You clearly don't have to be a teacher, but thank you for doing so. Again, I'm going to detail, by the way, this is, stay safe. This is Chris. This is on March 26th. On March 26th. So I wanted to give you some recent emails and so forth. Okay. This is everything you're going to get tonight. And again, you're going to follow me to this web address here momentarily. It's the guide, okay, to small account growth with in-out spreads. We'll give you the first bonus is 3 months access to everything. There's daily live trading chat room 6 hours a day, archive 24/7, text and push notification, trading indicators and scans, coaching sessions, okay, all unlimited support there, email support. It's all part of it. Bonus number 2, you have access to 88 classes. There's day trading and swing trading and technical trading, beginners options trading, advanced options trading, and much more. And there's new monthly classes. Okay. Follow me right now to this address because I'm going to take you over there. Okay. This is where, okay, you're going to follow me to this link for the SPX expected move indicator. I told you, I promised you guys that this evening. Go to TheoTrade.com / okay, I, N as in Nancy, right? Hop over to that one. In fact, I'm going to take you there right now, just so everybody's kind of on the same page with this. So if we're on the same page, boom, there we go. Okay, guide to small account growth with in-out spreads. First of all, this is actually the enrollment page here that I just took you to. I'll reiterate once again the web address, and I'll throw this up here for you. It's TheoTrade.com / in. We're here to help you guys. For those of you that are enrolling, all you got to do is click add to cart. Okay, click add to cart, and I want to show you, okay, a couple of things over here. Again, it's $297. It's a completely riskless trade. As you go through over here, I'll reiterate once again, this is not a membership, okay? It is a one-time $297, okay? That's it. We're not going to bill you again. I reiterate that time and time again. All the different bonuses are listed on here. Now, if you're back over to this main page, for those of you looking for the indicator, okay, scroll down towards the bottom of the page, okay, and there it is. It's the SPX expected move indicator. That's the download. It's on the page. So I wanted to reiterate again, the whole thing is $297. Now, I'm going to answer a couple questions, but I'm also going to take you into TheoTrade and show you a little bit about TheoTrade. By the way, again, there are 30 spots. The riskless trade is the first 30 people, plain and simple, and we have 1,000+ people on tonight. If you need to get a hold of us, you can call the 800 number, but the easiest way right now, just given the fact that we're all working kind of from our homes, okay, just actually chat now with us right over here. This is actually a support chat. Put your name and email address, and you can actually chat live with us if you have detailed questions. But you know what? You can actually come in and you could just go into the chat room right now. The chat room here in GoToWebinar. You can ask questions directly in there because we've got JP and we've got Matt and Tony and Corey. Everybody's on there. I mean, literally, like our whole crew. Jeff is in here too. We're all there. All right. Couple of things. This is TheoTrade. I like to show this is actually the chat room. You come in here. You can come in here tomorrow morning. Okay. Actually, you can come in here tonight. There might be a couple clients talking tonight. It's fairly quiet. So just to look through here at any given day here in the chat room. Okay. We usually have between 3,000 to 4,000 people. There's almost 5,000 people now at TheoTrade, but any given day there's about 3,000 to 4,000 that'll actually enter the chat room. Everybody kind of knows everybody else. It's a pretty tight community. You'll get into the flow of it, right? You just have to get into the flow of it. By the way, this is the guy that actually that wrote me that great email earlier. Okay, that he was saying, hey, I don't know if you guys remember me, but this is him. It's actually Todd S. Okay, right over there. Anyway, this is clients talking about stuff in here and trades. It's all in there. So this is actually the room where you will view our screens. The next thing I want to show you here, if you're brand new, I mean, some people are just like brand new, they're totally green. We have a start here menu. See it? It's start here. What is start here? Options 101. Okay. As I said, we're not just going to push you out in there and like push you into the street and, oh, you got hit by a bus. Options 101, options 101, options 101, options 201, options 301, options 301, volatility skew in you, order execution. What's order execution? We teach you every nuance, okay, of this business. How about this? What products to watch and why? Like, what are you looking at on your screen? That's all, okay, all part of the Start Here menu. So if you're brand new to this, absolute novice, this is where you go. Then some people go, well, how many classes do you guys have? There's 88 classes. I want to see your 88 classes. The 88 classes are broken into genre of trade. There's option strategy classes, option newbie classes, technical analysis, day trading, stock trading, futures trading, hedging strategies. I told you, we built Netflix. Why did we build Netflix? I've always been a real fan. Okay? I've actually been a fan. True fun story. Okay? The startup Thinkorswim had the same venture capital firm as Netflix. I've watched Reed Hastings since the beginning of his career, and I always thought to myself, man, that'd be great to actually build a company that had as much on it as Netflix and any trading strategy you can dream of. You want to see option strategy classes? Check this out. So here's all the option classes that we have. Iron condors, high probability in-out spreads, okay? Weekly options advantage, butterflies for consistent returns, beginner's guide to ratio butterflies, option Greeks, the big short, the risk twist spread. That people is the mother of all trades. Consistent small account growth formula, fruit fly for consistent income, duration iron condors. There's a straddles class, guide to surviving and thriving in extreme volatility. I just want to click on one of these and show you what it looks like because tell you what, this one was done March 7th. You want to know why it was done March 7th? Because crap was hitting the fan. Click here to download the slide deck. I'm going to tell you right now, you need to watch the in-out spreads class, but I think you should also watch this one. Okay, you got time right now, do it. Last thing I want to show you on TheoTrade. Okay, on TheoTrade, this is the member home. This is like an entire Google. We built a search engine specifically for any topic you could ever think of. Like, what do you guys want to know? You want to know in, okay, out spreads. If you want to know everything there is to know, everything that we've ever done here on TheoTrade about in-out spreads. Look, guide to small account growth with in-out spreads. This is a Q&A session. This is the class. In-out spreads Q&A. In-out spreads course material preview. It just goes on and on and on and on. Everything to ever know, okay? I love this one, okay? It's the ins and outs of in-out spreads, all right? These are all coaching sessions specifically on this topic. Listen, what we do here at TheoTrade, it's everything you're ever going to need. Literally, it's everything you're ever going to need. And I'm going to get there's a lot of questions right now, so hang with me for a second. Again, I want to throw the web address up really quick. It's theotrade.com/IN. Theotrade.com/IN. Okay. Hit the add to cart. It's $297. It's not a membership. Okay. In fact, that's the next thing I'm going to show you here. Okay. So there's the actual web address. Here's a couple of general questions. Then I'm going to come to some specific questions. Okay. Those of you that are enrolling now, fantastic. Again, I see a lot of people actually enrolling, and there's a ton of questions coming in here. So bear with me for a second. First question that always comes up. What do you need to get started? I say you need a laptop and internet connection, but you can use an iPad. You can trade off of an iPad. You can watch all your courses on the iPad. We have everything you need to get started from absolute novice to the most extreme traders. Question number 2, I'm just reiterating, it's not a membership. We're not going to auto renew or bill you again. Okay. I don't like that crap. This ain't no gym membership. If you want to do it after 3 months, people always ask this question too. It's $297. How much is it going to cost after 3 months? It's $297. How much is it going to cost after 3 months? It's $297. Listen, there's almost 5,000 members here. We're just shy of 5,000 members. Okay. You know what? Everybody pays $297 for 3 months. Why? Because it's the right thing to do. All right. Again, we have also the brokerage firms behind us. Number 3 over here, TheoTrade, we archive everything, every word we speak. We understand not everyone can watch live throughout the trading session. We're going to provide you access to TheoTrade Mobile. You can download the archives, view at your leisure. You can actually go to the site, view any archive. Every single day is archived. You know, we actually have all the way back to 2016 archived. 2016. We have multiple petabytes, okay, of data in terms of content streamed. Okay. You can email us anytime. If you have trade-related questions, you know what anytime means? I don't care if you email me at 2 in the morning. We got 24 hours to respond, though, but we'll respond to trade-related questions. So don't hesitate. You go, I don't know what the hell I'm doing on this Apple trade. Oh, please help me. That alone's worth $297. Number 6, you're going to get access. You got access to every course we've done in the previous 4 years. Classes, coaching, live trading sessions. Everything is searchable. Name a trading topic. We have an archive on it. Number 7, all the trades that we talked about can be done in an IRA, a retirement account, with as little as $2,000 in the account. Number 8, we'll help you get approved for options. We at TheoTrade, we have links to all the major broker dealers. Remember, I worked at Thinkorswim. I worked at TD Ameritrade. One of my close friends actually runs part of E-Trade. One of my close friends works, okay, and owns Tasty, okay? And, there's Tasty Works, there's E-Trade, there's TD Ameritrade. By the way, I have another friend that used to work directly for me that actually runs part of Charles Schwab. So you name a brokerage firm, we have friends there. It's a very, very small world. Now, number 9. Remember, we have 30 riskless trade spots available. I'll make that clear again. What is a riskless trade spot? If you're not totally satisfied over the next 3 months, you have to do 10 trades in the next 3 months. If you're not satisfied, just email us. We'll give you a $297 back. Okay? Listen, get results, take action, enroll for TheoTrade now. This is it, people. This is the time that you want to do this stuff. The volatility is right. It is happening right now in this marketplace. So go to theotrade.com/in. I am going to answer some of the general questions out of the room right now. By the way, I love this one. What our members are saying. By the way, you guys are rocking it. Very impressed. It's really refreshing to have you guys putting this together and sharing knowledge and not upselling everything and turning and burning your customer base. You've got a customer for life in me because of this approach. And I'm sure I'm not the only one. I just love that one because that's what we're about. That's from David. Matthew, Don is the most knowledgeable person I've heard in over my 50 years of stock investing, and I've listened to many. His knowledge of how markets works is like sitting next to a finance PhD. Highly recommend learning what this man has to say. And by the way, some of these are actually taken directly from Facebook. I'm very impressed with TheoTrade. I've studied under different stock coaches, various strategy intellects, different trading plans. I have not come across anything as good as what I'm seeing here. The people at TheoTrade are very helpful, extremely knowledgeable. I'm looking forward to this association for years to come. All right, once again, I'm going to pull this up here, and I am going to jump in and answer a ton of questions right now. Again, the web address right up on top over here, theotrade.com/in. I think I've detailed, again, it gives you access to 88 classes, 3 months, okay? Access to our live trading room, email support, everything you're going to need, the indicators, the scans. You got it all. All right, let me come in here and jump in. Let me jump in and answer a couple of the direct questions from the chat room as you guys are actually going in here. Click add to cart. Again, it's theotrade.com/in. Futures trading after hours. Do we have that? Absolutely. So we do trade futures here. We have 2 instructors that specifically trade futures. That's Corey Rosenblum and Tony Rago. We will do some trading after hours, and we do talk about extensively trading after hours. Okay. Another question says, what's the standard duration for in-out spreads? The standard duration for in-out spreads shifts dynamically with volatility. That's the only answer to it. I know everybody's like, well, is it a month? Is it 2 months? Is it 3 months? Okay. The higher the volatility, the shorter the time frame. The higher the volatility, the shorter the time frame, the in-out spread. Okay. What percentage of the spreads are winners? Okay. So I'm going to get into the mathematics of the spread for just a second. Okay. Embedded into an in-out spread, there is anywhere from a 62 to 74% probability, okay, of hitting your profitability point. 62 to 74% probability. Now that's a little bit of a weird, answer to it, but you'll understand once you actually go through the course. So you have from a 62 to a 74% chance of hitting what we define as a profitability point. What's a profitability point? Profitability point, well, that's exactly what we're going to define in the class. Okay. You know what? Somebody said, hey, can Don show us a few losers? I've got a couple of losers in here. If you wanted to see a loser, I'll give you a good loser. Okay. XOP. So in XOP, I've actually taken a full loss on the spread. I lost a full $1 in here. Okay. That right now, okay, recently, people, that's about it. Costco, I'm actually doing great in. But XOP, you want to see a losing trade? There's a losing trade. We actually have to go back more than 30 days in here. Okay, these are actually some of the other trades that I've got on. But XOP, I actually took a recent hit, and it wasn't that it wasn't pretty. I just took a full loss on a trade. It happens, people. It happens. Like, you got to get that through your head. You're not going to have all winning trades out there, and I actually appreciate that question in there. Somebody said, do you hold when the max credit potential is reached? No, you're going to exit by a specific, on these in-out spreads, you're going to exit on a very specific percentage basis. So that's important. By the way, but how did you know the value of the starting spread? So Al asked this question. Basically, how much do you pay for one of the spreads? I'm going to tell you precisely. In the class, it'll tell you precisely what to pay for a spread. When I say precisely, it'll tell you to the penny. Do not pay more than X amount for a $2 wide spread. Do not pay more than X amount for a $3 wide spread. Do not pay more than X amount for a $5 wide spread, a $10 wide spread, and so forth and so on. Okay. Mark just asked an interesting question. Do you have trades get in and get out on the same day? Mark, constantly. If you want to trade futures, we trade in and out, in and out, in and out all day. Like we'll give you 50 different setups a day for futures trading. By the way, that's in the main room every single day. Okay, in the main room, just like you sit there and you have to understand what they're talking about. So you're going to have to go through a little bit of the courses. Okay, but as I scroll back in here, okay, and I can go back in like the entire day. When I say I can go back in the day, I can actually scroll back. Okay, we're scrolling back into the trading world. Okay, and when I start scrolling back in here, and it's during a very specific portion of the day, you'll start to see all the different setups being placed by different instructors. Okay, there's Corey in here. And when we start to place setups, and again, today it was a little bit more quiet. Here we go. Okay, that's actually me with some nice fills in here. Okay. Anyway, as you go back in here, and I apologize for digging through all of this, you'll see all the different entry and exits over here. Okay. By the way, this is me. I'm saying Boeing. We have a Boeing trade on. Close at will. All the instructors' comments are highlighted. Okay. All the instructor comments in here are highlighted, so you can start to go back and through all the different instructors, everything that they're saying throughout the course of the day. All of this, again, all of it is archived. So we also start to place, as I said, there are setup after setup after setup in these chat rooms, okay, throughout the course of the day. And that's actually all those highlighted comments are me. They're all me, usually in the chat room. Tony Rago is also in here extensively. This is actually Matt Williamson. He's also making a couple of comments, goes on and on. So we place constant setups throughout the course of the trading session. I just wanted to show you, again, we're not only talking in the room, but we're also texting and shooting out trades. So, okay, continuing on over here. I hope I get all of these. Okay. Oh, somebody said, do you have to use Thinkorswim? You don't have to use Thinkorswim. You do not have to use Thinkorswim. We have again, we have a negotiated rate with E-Trade. We deal with Tastyworks. Okay. We deal with TD Ameritrade. You name a brokerage firm and we'll help you out. By the way, if you're Canadian, I want to make a special shout out to the Canadians. We realize some of the Canadian brokerage firms are absolutely outrageous. We'll even give you tips for cheaper brokerage firms in Canada. And, you know, you're limited what you could do in what's called a TSA. That's a Canadian account. So absolutely, we'll discuss that. All right. Let's continue on over here. Oh, the questions are just pouring in over here. Okay. If I move into a self-directed account, can I use the account to pull income from or just from retirement? So Mark, okay, Mark, you know, a self-directed account, it depends if it's a retirement account, your age, okay, whether you can actually pull capital out of it. I can tell you specifically if you email me, okay, if you email me, I can tell you specifically all the different details about your account, whether you're over 59 and a half, can you pull capital out of the account? Is it a retirement account? I can help you with every aspect. You know, the irony is, again, I spent 15 years in the brokerage world, so I still know all the ins and outs of the rules of that brokerage, you know, world. All right, I'm scrolling back a couple of questions earlier here. Oh, how long, okay, are your contracts for in-out spreads? So again, Eugene, that one, as I kind of said earlier, how long are these contracts? Is it 43 days? Is it a month? Is it 3 weeks? Okay. Again, it depends on the volatility of the marketplace. The volatility of the marketplace actually defines the time frame. And I cannot stress this enough. Again, this was one I think I hit earlier, but somebody says, does this work on options on futures? Absolutely. Okay. Absolutely. Okay. Oh, somebody said, hey, I'm studying a little bit about Thinkorswim. Okay. Do you have anything about Thinkorswim? We have full demos of Thinkorswim. I'll remind everybody, a lot of the Thinkorswim platform I helped put together, okay, over a 15-year career. So I'm probably still one of the most well-versed people in Thinkorswim. And I'm not saying that to be a little arrogant. I know Thinkorswim, okay? It's my baby. And I really feel that way still. And people go, why are you still on Thinkorswim? Because I helped build the Analyze tab. Like, I spent years of my life pouring into that platform because I wanted tools for myself. Like, it's selfish, but it's true. By the way, I'm going to answer a couple more questions here, but I wanted to thank Jerry C. from Pennsylvania. By the way, this is everybody that's enrolled thus far. Jerry C. from Pennsylvania, thank you. Ricardo D. from California. Michael L. from North Carolina. Mark T. from Illinois. Tim H. from Florida. Charles T. from Colorado. Robert C. from Oklahoma. Jeff M. from California. John D. from California. Anthony from Pennsylvania. Robert S. from Illinois. Mark B. from California. Larry B. from Kansas. Richard P. from Texas. Bruce S. from Alabama. By the way, got a couple of instructors down in Alabama. John M. from South Carolina. Joseph W. from Ohio. David A. from Indiana. Ruth L. from Arizona. Where in Arizona are you, Ruth? I must know. And Mark K. from, looks like North Dakota. I hear the weather is beautiful up there this time of the year. Again, we have 30 spots to the riskless deal. I'm just looking through here. I think we just covered about 23 of them. I'm just glancing. I think it's 23. We have seven of the riskless spots open at this point. By the way, I like this. Somebody said, in 1,000 words or less, what is Thinkorswim? Thinkorswim is a trading application. Okay, it is I would say, pinnacle of all trading applications in this industry. And I am biased because, I treat Thinkorswim like one of my own children. Okay. Right. That's probably not a good example right now because I've been locked up with kids for like an entire month here, but it's a trading application and it's fairly robust. You don't have to be on it though. I'm telling you right now, you could be on Schwab, you could be on anything now because most of the technology has kind of caught up with Thinkorswim. All right. So I like it. Somebody's like, I agree with that statement. It is pretty good. Okay. Okay. By the way, Jerry, we can take care of you. No problem. Jerry's having trouble getting enrolled right now. No problem. But we have a lot of people enrolling right now. So by all means, if you're having a little difficulty because our site is getting clogged up, okay, enroll. I mean, it'll take you 2 seconds. We'll get you guys through. Okay. All right. Sorry, I'm looking, Steve, if you want to contact us directly right now, by all means, we will get you taken care of. I think I got the vast amount of the questions. Okay. And again, if I didn't, please enroll, turn around, shoot us an email. Okay. I'm going to answer them. And again, we've got myself and JP. And if you get an email back from JP, he's a trader as well. We have people that we don't have regular support staff here at TheoTrade. Everybody here trades. Everybody here, pick up the phone. These people trade, and it's important to us. Okay. By the way, I'm going to kick off TheoTrade tomorrow morning. We start, if you're Pacific time, 6:22 Pacific, 6:22 in the morning Pacific. That is 9:22 a.m. Eastern time. We kick it off. I'll be on for about an hour and 10 minutes. Then we'll turn it over to Jeff Bierman. It's going to be we're going to be rocking tomorrow. Okay? We're going to be rocking tomorrow. This volatility is not going anywhere. Again, I want to thank everybody for joining us tonight. If you need anything after tonight, you hit me at support@theotrade.com. We're going to answer them. Again, enroll tonight. It's theotrade.com/IN. I do want to thank everybody for joining tonight. By the way, we're almost completely filled now on the riskless spots. Thomas D. from Wisconsin, Peter O. from Florida, Forrest C. from Indiana. There are 3 riskless spots left now. I was 1 off on there. There's 3 riskless spots left right now. Hop in there and get it done because that's what we want. We want you guys to have absolutely no risk in this trade. It's $297. Okay. For the next 3 months, you're going to be shocked at how much we do. And by the way, I love when you guys come into the chat room tomorrow. If you're brand new, okay, you're going to get thrown into the deep end of the pool. But some of the other clients in there are phenomenal. Thanks everybody for joining us tonight. Again, you have more questions. We're going to stay here for a couple of minutes, answer them. Again, it's theotrade.com/in. Have a wonderful evening. Bye-bye.